Hello, I'm Debbie Hughes with Catoosa County Chamber of Commerce, and I want to welcome Lorraine Young here with me. She's with USA Mortgage today, and we're going to talk about what you can do to finance a house these days, even though the interest rates went up, and maybe you need to refinance, or you're just curious about what's going on in the market these days. But Lorraine is involved with our chamber, and she has been an ambassador with us, and she comes to a lot of our social events or fundraising events, and so we appreciate everything that she does for her.
Thank you. Thank you for having me.
This Saturday, July the 2nd, we're doing our Run White and Blue. You probably heard us talking about it over the last few weeks. We still are taking registrations. We had several calls today wanting to know if they would be able to register. You can still register for the 5K or the 1 mile fun walk. You can register at CatoosaChamberOfCommerce.com/run. CatoosaChamberOfCommerce.com/run. And if you forget that, you can call our office at 706-965-5201, and we will be happy to give you the link to register on, and it will be a fun time. It starts at 8 o'clock at the Colonnade, and then later in the day, from 1 to 6, there will be a market there at the Colonnade inside where it's cool, and then from there at 5 p.m. we'll start live music and food and children's activity, and at 9:30 there will be fireworks. So it's a whole day of celebration around the campus, Bentley Place, and the Colonnade. Bring your family, come out and enjoy it, and come out and run, come back later, and there's just a lot to do that day, and it's Saturday, July the 2nd. And a few other little things that are going on with our chamber is we'd like to recognize our tourism partner of the month. That would be Boyd Speedway. Maybe you don't think about them as a tourism partner, but they have people that come in from out of town, and they have to stay at our hotels, and they race, and so this is a great opportunity to let everyone that comes into our county see what we have to offer. Our restaurant of the month is Your Pie in Fort Oglethorpe, so if you haven't tried them, they're by Publix, and you get to put your toppings on your pizza, and it's or you can sit on the patio. But Your Pie in Fort Oglethorpe, and the nonprofit of the month is Catoosa Saddle Club, and they do great things out there. They have events at the arena. And one more thing, I'm gonna our business of the week is Lookout Eye Care. They're located at 1895 Battlefield Parkway. If you haven't tried them, please do. If you're looking for a new eye care place, you're new to the area and need eyeglasses or contacts, go by and get an exam with either Marlene or Corbin at Lookout Eye Care. They're located next to Planet Fitness and Dirt Cheap in that area. Of course, in the chamber, we always, want to support our businesses, and we'll talk a little bit more about some other businesses and stuff as we go along. We do have a cards and coffee coming up. This is the first time we've been able to do one of these events. I don't know if y'all can see this or not, but we're going to do this August 2nd at Ming Mug. It's come and visit, grab a cup of coffee, bring your business cards, and it's open to everyone to mingle and make new acquaintances and help businesses grow. So I'm going to talk to Lorraine now about some of the stuff that she does, about interest rates, mortgages,
Refinance.
refinance. So how long you been doing this?
5 years. So
Okay.
I retired from the Catoosa County school system in 2017, and I started doing mortgages in 2018, the beginning of 2018. And I worked with another girl for several years, and she kind of helped me get going real good, and then I went out on my own.
Wow.
So here we are.
Yeah. So how is the interest rates today? Because I know they're changing. Let's talk about today.
Yeah. Today, about midday, we got another lock alert, which means they're not doing well. The rates they're high. They're higher, I guess. Historically, they're not that high, but they're high for what we've seen in the last few years during the pandemic. So we're in the sixes, and low to mid sixes right now with the rates. Most all the rates require points right now too, and that's because investors feel like those loans are not going to be held for that long, and so it's kind of like a pay an interest up front type thing. So that all of them, just about every rate right now has points attached to it.
Do you see the rate of refinancing slow down because of this?
Yes, refinances have slowed down. Although I saw an article today about in the jumbo category that refinances are up, and people do have trillions of dollars in equity, nationwide, trillions of dollars in equity in their homes. That's where their wealth is, and so people use that opportunity to cash out refi to pay off debt, to purchase investment properties, to add on to their house or build swimming pools, etc. So lots of things they use that money for.
Typically, I know in the 70s and 80s, the rates were much higher.
Absolutely.
Absolutely.
18%.
8-10, on up.
Yeah.
But we got used to that 3 and 4 and 2 and
yeah. Those were the good days. They're gone.
Well, do you think that it's going to balance itself out now? Because there were so many houses, that the market couldn't even put in. What I'm saying, I guess I'm trying to say, there were so many houses being bought that there was a shortage on the people trying to.
And there still is. So demand is way high and the supply is way low. So there's not as many. There seems to be an uptick lately of homes that are coming on the market, but overall there's way more people that want to buy than there is available properties. And seems like a lot of the lower valued homes or homes under $500,000, I'd say, a lot of them are being bought up by corporate. So big corporate America, because their rate of return. The rate of return. Where can you get that kind of rate of return?
A lady walked in our office today and she said, I don't know where to start. Put my house on the market Saturday, and we'd been in it 50-something years, and I'm 70-something years old, and it sold.
In one day?
It sold, and she was in there looking for an apartment listing. She didn't know where to start.
Go.
And I think, that's something to think about, because I know another couple that's happened to. They sold their house.
And they didn't have anywhere to
go.
Yeah,
and they still don't, and they are stressed.
They don't want to put that contingency in their offer for their new home, but people that are buying. But I'm like, you need to make sure you have somewhere to go. And rents are up. Rents are way up too. So,
even if you are in an apartment, I know of a situation where someone's rent went up $250
a month.
A month.
Yeah.
So you've got to be prepared to be able to get out of one house to buy another one. You got to be prepared to maybe have to rent till you find the right house.
Yeah. And finding somebody that'll rent to you on the short term, that's hard to do too.
So I think
there's a lack of rentals as well. You just don't. I don't hear of a lot of rental places being available, but I see people every day going, hey, somebody, Facebook, tell me where there's a rental available.
So how do you get yourself ready for a mortgage? If you're planning on buying, you found something, but you should be pre-approved.
Yes,
So
absolutely.
tell us how you do that, and not to get yourself in trouble during that period of time before you close on your house.
Okay, so to get pre-approved, typically you're going to fill out an application. You're going to turn in documents that show what your income is, like your pay stubs, what's your income, W-2s, taxes, if you're self-employed, 1099s, tax returns, so your income can be estimated. So we want to do an income calculation. We want to look at your credit, look at your debts, and make sure what those ratios are. And using those ratios, that's kind of how we fit people in different loan scenarios to see what's available. And it really depends, if they're in a rural area, maybe they can use a USDA loan, which is zero down. Or if they have a high debt to income ratio, a lot of times FHA works best for that. And conventionals usually cater to higher credit scores, just because the mortgage insurance is very expensive if you don't have a super high credit score. But a lot of people think you have to have 20% down to get a mortgage, and you do not. You can get a mortgage for as little as 3% down if you're a first-time home buyer. Sometimes 0% down if you qualify for USDA. Or really, it's not. You have to qualify, but the home has to qualify as well. So it has to be in a rural area to qualify.
But you should go ahead and kind of get out everything ready to know what you can.
Right. So you want to contact a lender. You want to fill out an application and let them pull your credit and look at your debts and look at your credit, and then they can determine what loan type is best, and they can also determine how high, what your buying power is. So what price range you can purchase in. I lost my thought. Sorry.
Well, I've heard people say too, if you're in the process and you've started it, don't go buy a new car.
That's right. Don't go buy a new car. Don't
open
change
credit.
jobs.
Don't
open new credit card accounts. And we say don't do that. Now, it can happen. It's not that but it just makes a lot more paperwork. It makes it a lot harder when you're in the middle of a mortgage. So so we say don't do any of those things. Don't, and you can't bring money out from under the mattress to use for your down payment and closing. So your money has to be what they call seasoned, has to have been in your bank account for 2 months.
Oh, that's something I didn't know. That was one I've never heard.
So you can get a gift. Like if a family member wants to gift you money, you can use a gift towards your down payment, closing, that kind of thing. But if whatever money you're going to use towards your purchase has to be in your account for 2 months and seasoned. You can't just go, I've been saving up all this money under the mattress for years, and pull it out and decide to use it. That doesn't work.
Okay.
No
I didn't know that.
Mattress. No money from the mattress.
You can lock in a rate.
You can. And you can lock in, there's such a thing called lock and shop. So you can lock in a rate now, and then you have, I think it's 90 days to shop and close. Okay. And then if you need longer, you can get, quote, a lock extension type thing. But I think it's 90. It might be 120, but I'm thinking it's 90 if I remember correctly. Lock and shop. And lock. Don't
I started to say, do you think that the market's going to continue to go up?
I do. Right now, I do. In the short term, I see it continuing to go up, and the Fed rate went up, and it's not really helped. We need for inflation to slow down. We need inflation to slow down.
When you're getting a mortgage, You also have insurance
Yes.
and taxes built in that. So when you're looking at planning your payment,
Yes.
you should also either know that you're going to be able to pay those separate, but most mortgage companies want you to include those.
That's
It's
right.
a guarantee that that insurance and that property taxes is going to be taken care of.
Right.
So you have to,
Rates are a little bit tied to that. So if you choose to waive the escrows for taxes and insurance, then your rate may be slightly higher. And if you don't waive them, because that makes less risk to the lender that they're going to be paid, and so the rate is slightly better if you don't waive paying escrows. And you have insurance, your homeowner's insurance that's
Right.
paid for a year up front at closing, and then escrows, usually about 3 months in escrow. You have property taxes that are escrowed. You also have mortgage insurance. If your down payment is less than 20%, you're going to pay mortgage insurance on every mortgage. Absolutely.
Yeah.
So it's best to plan for that. And all those things add to the payment. And so a lot of times people look online and they're looking for homes and they see, oh, look at this home and the payment's, $900. Well, if you look in the fine print, it says that's with a 20% down payment and a, 800 credit score.
Yeah.
So it makes a lot of difference. Yeah.
and even you get stuff in the mail, we can make your payment, this. And I'm sitting there going, I don't think that's there. It doesn't include the taxes or the insurance.
Or the insurance or the mortgage insurance. Yeah, absolutely. So there's lots of little tricks that are out there to make you think that payment. So I always tell people, don't go by what you see. You need to make sure you're reading the right thing. Read the fine print.
Yeah. Now, you don't do any kind of equity, do you?
We do home equity lines of credit, but it's not our preferred loan to do. Usually
I figured the banks mostly did that.
Yeah.
And then people are talking about ARMs again. I heard that word used on TV the other day.
Yes.
And I know that's what got us in trouble, wasn't it, in 2008 a little bit.
Well, I have an ARM. I had an ARM on my home when I bought it, and because the interest rate was lower. So it was good, and it worked well for us. But I know ARMs are scary, but right now a lot of people are choosing an ARM because rates are maybe a little lower, and you can get an ARM like a 7-1 ARM or a 10-1 ARM, which means the rate's going to stay the same for 7 years before it ever changes. Okay, and then the max it can go up or down is 1%. Okay. And then a 10-1 would be 10 years before that changes. And most people that choose to use an ARM in that kind of situation, they're going to refinance if rates go down.
Okay.
Right? So if rates go down before that 7-year period, we're going to refinance and get the good, right? So.
But I had heard that on TV one morning, and I went, ARM? Oh, okay. I used to hear that quite a bit,
Yeah, and then they just kind of, when the twos were out there, who needs an adjustable rate, right? But now that we're back in the sixes, and
the housing market around here has just, the values have went up so much, and then with the interest rates going up, it's going to make a big difference. And if you had looked at this house 1 year ago to today, it could make what, a $200 to $400
easy, very
difference.
easy. Yeah, I did a presentation just recently on that very fact. I was showing here's the cost of a house in 2020, here's the cost of that same house in 2021, and here's the projection, or here's 2022, but then here's the projection for next year. So 1 year out, because a lot of people hesitate when the rates are what they are right now, they choose not to buy. They say, well, I'm going to wait a year and see what happens. Well, in the meantime, you just lost all that equity that you could have had. And equity in the last couple of years has been up over 20%. equity. I mean, that quickly. And so people who bought their homes at those low rates, their equity's gone way up. They would be able to get out of their mortgage insurance because now they have 20% equity. Does that make sense? So, yeah, so equity's building. And the prediction is that in this next year, equity will build another 5% or more. So, you know, if you think in the next 3 or 4 years, 5% a year, there's another 20% equity that you won't have if you keep waiting.
Keep waiting.
And the price goes up, so you're going to pay, you know, what, 20% more for the house. You know what I'm saying?
What's your best score that, you know, that you like to work with? Somebody in the 700s, 600s, or 800?
You know what? I work with every score that comes. I'm like,
Okay.
if you got a
Credit-
score that
credit
works,
score.
we're going to make it work for you. Yeah, absolutely. And if people don't have the scores, we look at their credit and we try to, you know, look at different scenarios, what they can do to pull it up. So I work with some credit repair people, but we run our own kind of scenario and see if there's just something simple they can do to get their credit up quickly. But, you know, we go as low as 580 on a credit score, but a lot of times those turn into what we call manual underwrites. And a manual underwrite usually requires that you have reserves, so it just means you have to have more money. You have to have more money sitting in the bank at the close of your loan. And 640 that's good. If you got a 640, you qualify for every type of loan there is out there. Although conventionally 640 is a little rough.
Yeah.
That's hard to get.
Well, it doesn't matter. I mean, does it that you have credit card as long as you've made the payments to that credit card every month?
That's right. That's
I
right.
mean,
And as
people-
long as you don't have
I got to pay
such
my credit cards off, and I got to do this.
Yeah, as long as you don't have, it's when you have too much debt. You
Yeah.
know, you got a $100 payment here and an $800 payment here and a $300 payment here,
Right.
and your income is not enough to cover all that. That's when it becomes.
You're living on credit cards.
Yeah, absolutely. Which happens, you know, yeah, I've seen people that, and of course there's other family members, but maybe only one qualifies, you know, but the debt is joint in both their names, and so all that debt goes on you. That's like kind of sometimes people will become an authorized user, like especially young people will be an authorized user like on their parents' card, and then their score is reflected by their parents' credit, and their parents have good credit. The drawback to that is when you pull the young person's credit, it shows their parents, you know, let's say the parents' balance is high or they have a high monthly payment. Well, it counts against the child's debt to income, unless there are ways to show that they paid that bill for 12 months. If you can produce 12, say, canceled checks where the parent has paid that bill, then you can omit it. So
Yeah, I knew there was some.
lots of workarounds.
Yeah, you have to do your magic.
Absolutely, absolutely.
And get all the numbers right to make it work. And in refinancing too, you still have to come up with paperwork. And just because you own that house doesn't mean you're automatically going to get refinanced.
That's right. That's right. You can refinance up to 80% of the value of the home. So you have to have enough equity, right, to be able to do that, and then you can refinance, you know, whatever that difference is between what you owe and what you want and what it's worth. Then you can refinance at that point. And, you know, like I said, refinances were huge during the pandemic, but now they've really, really slowed down. So the market, there were lots of new mortgage companies even that came into business during the pandemic.
And lots of new real estate agents.
And they're closing shop because the refi boom, they call it, is over, and now it's back to being mostly purchase. Yeah.
Well, I want to thank Lorraine for being here because, you know, this is a hot topic on all the news channels in the morning and everything. And I'm just going to ask you a question. Do you feel like that the chamber has been a benefit to you?
Absolutely, because the chamber gives me an opportunity to meet all kinds of new people. And so, and while, I may not do business with every single last person I've met other people that my service and their service complement each other, and so we refer business back and forth to each other, and so that's been huge. Yeah. The chamber is a big help.
Yeah. I don't forget, this weekend there's a lot going on.
I'll be at the fun run.
Yeah, she'll be at the fun run. I saw that today. She's a volunteer. We've had, like I said, we had some people call in this morning and asked if they could, go ahead and still sign up. Yes, asking about T-shirts. We tried to cover as many as we could. I think we've got enough to cover everybody that's going to be running.
Yeah.
And it's going to be fun. If you don't run, maybe you walk one
Maybe
mile.
you walk, yeah.
But it's it's an opportunity to get out and support the chamber and also support small businesses, because that's what we do. Is we use our money to help small businesses and large businesses too through programs that we offer. We have 5 leads groups that meet weekly. Those are great networking opportunities. We have ambassadors that go out into the community and they meet new businesses. We do ribbon cuttings. Anytime that you see something or hear something and you want to know more about it, feel free to call the chamber. A lot of times we have information that maybe a new apartment complex going up in Ringgold. Everybody was calling about it. We were able to provide people with the phone number, how to do this, and now they're down there taking applications, but we had the number in advance. So if you see something or want to know something, if we have the information, we'll pass it along to you.
If it's going on in the county, call up the chamber.
We try really hard. And, remember the county is providing fireworks this Saturday night.
Such a great show.
And that will be at 9:30. So you can park if you don't want to come to all the other events, you can park in the general area of the colonnade. I know a lot of people parked on Battlefield Parkway at some of the banks or the hospital, and they could see the fireworks. So, and it's not just a little quick boom and it's over. It's always been a very long and very
beautiful.
Vibrant.
Yeah,
I was trying to think of the right word, vibrant.
Yeah, absolutely.
And it does last. So bring your kids out, and it's free. No admission cost. This is something the county wanted to do. It started back during the pandemic, and it's just a great opportunity for everyone to come out and enjoy the day. Inflatables and live music starting at 5 p.m. From 1 to 6. There will be vendors inside the colonnade, so you can go in and cool off and see what all the craft makers or I don't know. I know one guy's bringing homemade jellies. He comes to the markets every weekend, and he's bringing homemade jellies. We've got people that make earrings. We've got people that probably make, wood products. It'll just be a great time. So crafts from 1 to 6 at the colonnade. 5 o'clock, live music and children's activities and food trucks and Kona ice and all that good stuff. And then at 9:30, your fireworks. But start your morning off early and come to the run or the walk at the colonnade. And we appreciate it. Yes, we appreciate it very much, and hope that you enjoy yourself that day, and it's a safe and happy holiday for you.
Thanks for watching.